Hello everyone and welcome. Today I'm going to review the major indices and give 3 option plays that you can do this coming week. We'll also talk about the meme stock mania that happened this last week with AMC and GME. We'll also talk about 3 stocks with high option volume and see if there's anything that we can take action on. Let's get started. Wow, what a week last week with a super strong finish to the week on Friday. We had the S&P 500 rallying 0.89% into the close, Nasdaq rallying 0.97%, and the Russell 2000 rallying 2.82% on Friday. The meme stocks were flat on Friday, but were up 18% for the week for AMC and 28% for the week for GME. Let's look at the indices on multi-time frame analysis to make the plan for next week. Super bullish looking chart. We can see that overall we have remained above this 50-day moving average for the most part, and any time that we touch the 50-day moving average, it is getting bought up. We are also pretty much over the 20 moving day average, and this is also has been a good area to buy previously. We can see from this that this bar is a full body, means that there was no real sellers here. There is absolutely no supply in this market, and there is huge demand. There's a lot of buyers and there's not enough supply, and this pushes the price higher and higher. On analyzing this chart, we can see that the S&P 500 is coming over into overhead resistance, and this trend line was all the way back here from the coronavirus crash. We have a touch here, we have multiple touches here, touch here, and again touches here. We are coming over to this overhead resistance. The target is 45.51, and this is the Fibonacci retracement from 2018. I can definitely see the S&P 500 hitting 41.15. I'm going to be buying puts once we hit this level because there is a lot of supply up here. However, this market is extremely strong. There is absolutely no supply. There is a lot of demand, and that's pushing the price higher. So it would be interesting to see how much supply is truly up here and if the demand can just go through this level. But we are heading into multiple areas of resistance and supply. Therefore, at this level, we can potentially see another move down to the 20-day moving average, or because it is September, moving into the 50-day moving average. For this week, I anticipate potentially a little bit of a selling off and then a continuation pattern, but I do believe that this week will be a bullish week in the stock market. I think a lot of things are going to be going up as we head into September, because September will be a super negative month in my opinion, and we'll see how that plays out. Okay, moving on to the Nasdaq. Again, we have the trend lines coming all the way back here, and it's really amazing how it has respected them. This is probably more bullish than the S&P 500. We are coming into the 20-day moving average touch, and we are moving higher. The target for the Nasdaq is 381, which I believe that we could probably hit there by the end of this week as well. However, we are coming into huge amounts of overhead resistance that previously have caused a sell-off. So it'll be interesting to see if it'll cause another sell-off and how we can take advantage of that. If you look here, the biggest component of the QQQ is Apple. So if you look at Apple's chart, this does look a little bearish. It's moving sideways. It has come off resistance here. This one, it could easily move down to the 50 moving average, and this is something that we could probably trade. The other components, such as Google, is extremely strong. If we look all the way down here, these are the fib retracements, but this is essentially it's open season up here, and this is much more bullish than Apple. Okay, and then if you look at Microsoft, this is coming into the support. You see these, it's a little messy here, but if you see this retracement, it perfectly touched there. Now we're coming back into this support. If we break below here, I'm going to be looking to take a trade down here, and then to the 20-day moving average, and then probably the 50-day moving average as well. However, if we have a continuation above here, then we can really move higher. The next target for Microsoft is 329, and we can look to get involved there. It's really important how it opens on Monday. Okay, moving into the Russell 2000, we can see that this was extremely bullish. We blasted through the 50-day moving average like it was nothing. a very strong candle, 2.82%. That is like a more than 2 standard deviation move if you're looking on the short-term options. And this is just insane, guys. Like there's literally no sellers, huge amount of buyers. We are coming into here. I would not be surprised if we hit 228. One stock option play that I will be playing, if we hit this 228, I will be buying heavily, be buying puts, because as we see, this is moving sideways. Out of all of the indices, it is the least bullish looking because it's just moving sideways. Okay, not a lot of buyers for these guys. Lots of supply. There is no supply and huge demand for S&P 500 and the NASDAQ. Small caps, not so much. So once we hit here, I will be buying puts. If we move down to here to resume, because I do believe that overall this week will be bullish, I will be looking to buy super short-term calls, probably expiring on September 3rd, and looking to make this play once it comes back into support, and then play this off again. These were super key levels the IWM has been managing to break, so it's very impressive that it is actually. Okay guys, so other than that, we are just looking to play the indices this week. Playing individual stocks for options doesn't make too much sense to me because your risk profile goes through the roof. We are already doing extremely risky trading, and that is trading options. There is absolutely no need to make it even more complicated and buy single stock options, as one piece of company news can either tank the price of the stock or make it go very high. Since we are doing stock options, which already has an incredible amount of volatility to it and variance in how much you can make, we don't need to increase that risk by focusing on single stocks. However, with that being said, I do believe that in some cases it does make sense to play individual stocks, as the returns can be crazy, particularly the meme stocks such as AMC and GME. However, with those, you have to follow a strategy and you can't just blindly buy in. A good strategy that I like to follow is to look at the historical volatility of these stocks. We want to buy these stocks when there is a volatility contraction, meaning the option premiums have gotten cheap based on their historical trends. We can look at the 30-day historical volatility and we look at the implied volatility and compare it to see where it has been in the last 6 months. If we have seen that volatility is nearing the lows, then we can purchase the options, hoping to make profit on not just the underlying stock moving in your direction, but also the volatility expanding. And probably the most important thing to take away from this talk is that the reason why this works is because volatility is mean reverting. However, price is not mean reverting. Prices typically trend in a certain direction. Either they move up or they move down. However, volatility is always mean reverting, so the charts look much different than the price action, and it always goes to some mean. Using this strategy, we can make money in two ways. If the volatility expands to the mean and the stock is flat, we can make money. Or if the volatility goes up and the price goes up with it in the direction of our trade, we can also make more money that way. If the price falls, so for example, if you have calls and the price falls and you have volatility expansion, some of your losses will be protected because of the increased volatility, making your options more expensive. If we look at some of these, we can see that the weeklies, the 227 is around $2, which is above our 228 target. However, if this does go lower, then these become much cheaper, and we can probably buy a 225 strike call expiring this Friday. These puts, I will be buying these September puts, September 17 puts if we get up to 228, as these I believe are very cheaply priced. Another good trade would be Apple puts. You could be doing the September 17th, 227. I do believe that by the end of this week that it will rally, so these might become cheaper because this week will be a bullish week in my opinion. However, these are very well priced in my opinion. So 148 is 227. If we go back to our Apple chart, it's very reasonable that we come down to this 50-day moving average, and that is 144. So we can definitely break even and make a decent amount of profits if we head down to the 144 level. Microsoft, if we break this level, we could definitely be coming down to the 20-day moving average, and if not down here, 289. We also look at these stock options. So 297.5 is trading for 345. Let's say this is 350. That would make our break even 294. So in my opinion, that is actually very reasonably priced. 294. If we come down here, 294. So even if you touch the 20-day moving average, you're making quite a bit of money. And even if you come down here, you are making double those profits. All right, guys, that is all for today. Thank you for tuning in, and I will see you guys next time.